Sam Bankman-Fried is one of the top people to watch in crypto. Not only has he become one of the youngest crypto billionaires, he's also founded and built one of the most successful crypto exchanges with FTX. Now, one of the biggest benefits you get from running a top crypto exchange is data. You get to see what's going on behind the scenes, the trends, the insights, all giving you a much deeper understanding of the crypto market. Now, in a recent interview with CNBC, Sam shared insights into what is going on in the crypto markets right now, and also what exactly is needed to get crypto back to setting new all-time highs. And so in this video, we'll be looking at what exactly is going on in the crypto market right now. He then shares some interesting insights into the differences of the market in 2020 versus the market in 2022. And then we'll finish up with what he thinks is needed to get the market bouncing back and on to new all-time highs. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, first up, Sam shares some insights into what he is seeing from behind FTX right now. Ready? Let's do this.
It's worth noting that there's also been more volatility, which is pushed a little bit in the other direction. Right now, I think our sort of like 2022 run rate so far has been slightly higher than our 2021 average, P&L was. So I think things have still been trending slightly up, but I think a lot less growth than we otherwise would have seen. One thing which I think is like relevant to note here, though, is that this is not really a crypto-specific move. And that's different from some previous times when we have seen crypto acting pretty idiosyncratically. If you look over the last few months, equities are down a lot. And I think it's been sort of a two major factors. The first and the biggest by far is monetary policy. There are now significant expectations that because of inflation, the Fed is going to start to take up interest rates, and that's going to have probably pretty big impact on what we see. Like I think on the margin, that's just going to be decreasing balance sheets. It's going to be like less buy pressure. It's going to be effectively curbing inflation in the U.S. dollar, and so I think that's one piece of this that I expect to be real. And I think the market's pricing quite a bit. And I think that's led to a big drawdown in crypto. I think it's also led to a big drawdown in equities, especially the sort of growth tech equities that had been growing a ton during COVID. The second thing, which is more recent, is just the Ukraine situation, which I think has put a lot of fear into markets. I think it's not obvious what the long-term impact of that is going to be on crypto. I think that in particular, you could make an argument for why this increases the demand for crypto.
So, interestingly, the run rate at FTX, even though we've had a big pullback, is still trending higher than it was last year. The big question is, though, have we already entered a crypto winter? Well, a crypto analyst at Bank of America recently said, there won't be another crypto winter if you take a look at what's happening in the user and developer growth of crypto. But it is still true that there's a lot of uncertainty in the markets right now with interest rates and what's happening in Ukraine. However, the president of El Salvador recently said, the intrinsic value of Bitcoin is now in full display on the world, as Bitcoin's price recently jumped up 15% in just a single day. Next up, Sam shares some interesting insights into how the market has changed from 2020 to where we are now in 2022.
Yeah, so overall, I think we've seen the amount of risk in the system become much more reasonable over time. I think that you rewind a few years to March 2020, and there's a big market crash, and during that market crash, something really interesting happened, which was interesting in a bad way in this case, which was that basically, markets got out of control on their crash, and it got to the point where you actually like couldn't find bids for anything. Like there's people had too much like leverage on specifically being long relative to the amount of capital that was in the space. And so first of all, there's massive liquidations that were sort of causing cascades, and as the sell side liquidations happened, they drove markets down and triggered more sell side liquidations at the same time as I think there are too many people taking too much leverage. Um, there wasn't enough capital in the space to backstop the bids. And so as you had sort of this downward spiral unfolding, there was no capital that was sort of coming in and buying during this sort of periods of large liquidations in the way that I think would be sort of like economically efficient to do. Instead, things just kept falling, and Bitcoin was down more than 50% on a single day at one point. That's very different from what we see today. Today, we see a much healthier space where, I mean, first of all, people are just taking less leverage, which is a big part of it. But second of all, like in addition to using less leverage, there's more institutional capital in the space. The larger players have more capital, and so that means that during volatile markets, liquidity doesn't dry up nearly as much. And I think a combination of those two things together has been really impactful.
So one of the biggest changes he sees is that over the last couple of years, we now have some institutional capital in the market. So when we get these big sell-offs, there is some solid liquidity there that stops these 70, 80, 90% crashes that Bitcoin used to go through. And he also says that the amount of people taking out leverage and the extreme leverage of 100x has settled down a lot. Okay, to finish up, what exactly is needed moving forward that is going to give a shot in the arm to crypto and taking it back to new all-time highs?
And by far the biggest thing here is regulation, and in particular, the US regulatory environment. Like if you look at the largest trading institutions, what are they waiting for? What are banks waiting for to get involved? I think it's basically entirely clarity on the regulatory side, right? These are institutions which are used to assuming that whatever fees happen, they're going to get the biggest and the first. And, they're going to have the most regulatory scrutiny on them. And they want to be confident that they understand a system before going in perfectly. And so even just sort of like some amount of uncertainty in the regulatory environment is enough to scare them and make them feel not super comfortable getting involved. And I think that's going to happen. I think it'll take time, but I think it'll happen. And so, I sort of expect that like over the next year or two, there's going to be enough clarity that more institutions will come in, but it's going to be a trickle. It's not going to be a deluge. You're not all going to come at once. My sense is that the first thing, or one of the first things to move, is probably going to be stablecoins, just because I think it's the easiest. I think that like when you look at the stablecoin regulatory framework, right, the goal there I think is pretty clear and straightforward, which is like have audits that confirm the backing of stablecoins, confirm that they are backed as they say they are, and again I'm excited and optimistic for that. I think that's going to be good. After that, I think you get to trickier things. And I think there's sort of like two other topics that are sort of like really central to the industry. One of them is looking at, basically looking at the markets regulation piece, at who has oversight of spot markets, who ensures that, there's no market manipulation, who licenses it. And that has not had a ton of clarity because basically, the United States has two different core markets regulators, the CFTC and the SEC. And the CFTC market is a market regulator for commodity futures, the SEC for securities. It's actually interestingly unclear what the answer is for spot commodities. They sort of fall a little bit in between those two. And that's been a big source, frankly, of tension and lack of clarity going forward. Is like, what do you do in a world where where there's two plausible regulators. I think in some senses two regulators can be worse than one regulator because you can get it too many cooks in the kitchen.
Crypto billionaire and FTX founder Sam Bankman-Fried is in a unique position to really understand the crypto market, being behind one of the top crypto exchanges. He says even though we've had a big pullback this year, the trading volume at FTX is still trending higher than it was last year. He sees much greater liquidity in the market when compared to 2020, as more institutions have decided to get involved. And as US regulatory clarity unfolds, this is only going to increase the adoption of the big institutions. And this will likely start with stablecoin regulation first, as they only really need to prove their collateral. And will it be the CFTC or the SEC or a combination of both that gets to set the rules of the game for crypto? But hopefully not the latter, as we all know, too many cooks spoil the broth. So, there you are guys, hope you enjoyed. I would say positive news coming from Sam and FTX, and on Saturday we're going to take a look at if crypto is about to do a big breakout, so stay tuned for that. But for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.